what's a really sexy topic? Insurance. I am Beth Smoller. I work for the Kansas Association of Insurance Agents. We are a trade association representing independent agents across the state. I've been there for a little over 7 years, and before that, I was an independent insurance agent. And before that, I practiced law a little bit long enough to know I did not want to keep track of my time in 6-minute increments, and so I found a better world in insurance. Before we get started, I'm going to let my panelists introduce themselves, get a little bit of their history, and then we'll get started.
I'll go first. I'm Ashley Woodorf. I work for ICI Insurance. I've been there about 5.5 years. It's an independent insurance agency. Before that, I worked for American Family for 12 years. So I have about a total of 17, going on 18 years of experience in insurance. So got a lot of knowledge to share with you today.
Hi, my name's Sierra Hernandez. I work for Conradi Insurance, and ironically, I also have 18 years of experience. I started with State Farm when I was in college and then have been in the independent channel the rest of my career, but just focus on personal insurance. So home, auto, boat, RV, that sort of thing. And happy to go through what we have and then any questions you guys have.
All right, my name is Sarah Sampson. I work for an agency called Fee Insurance Group. I've been doing this for over 20 years, and I specialize in the health insurance, life insurance, disability. So I know a lot about those things, from Medicare to the individual market to if you're getting it through your employer. So I'm looking forward to today's conversation because it's a big one in our country today, isn't it? The whole healthcare conversation. So looking forward to our time today.
Okay, I'm Beth. I know nothing about health insurance. That is completely Sarah's area. So ask lots of questions. I have questions prepared. However, please interrupt as much as you want. And there's this fun catch box. I was today years old when I discovered that this existed. But if you have a question, I'm going to toss this to you with the best underhand pitch I have. And then it's a microphone built in so we can hear it. I'll try to repeat it and we'll answer it. So don't forget, you do get 2 raffle tickets for every question you ask. So ask away. And again, do not hesitate to interrupt. I have stuff prepared, but I think I can speak for our entire panel. It's a lot easier if we're not talking at you, but rather with you. So, make this a back and forth. It's just a coffee chat with friends that know a little bit about insurance. So, does anybody have a question before we start? Okay. Well, this panel was made directly based on feedback from last year's Women in Money conference. So how many of you came to last year's conference? Ooh, okay. So at least one. Yep. Hey, I wasn't here last year. Yep. Great. So the feedback that participants gave from last year's conference led to this one. Treasurer Johnson reached out and said, hey, we've had a lot of questions about insurance. How do I assess my overall risk management philosophy? What can I not afford to lose? What can I afford to protect? Do I need an umbrella? Do I need life insurance when I'm 55? And the answer to almost every single one of those questions is it depends. But that's why we have people smarter than me that can help answer those questions. So we're doing this based on feedback you've given. When you get your survey after today that asks for feedback, please know that feedback is taken very, very seriously, and that helps coordinate and adjust what next year's conference will look like. So, with that said, why do you think so many women feel uncertain about risk management and insurance? Sarah.
Oh, you could start here.
Yeah, I'm going to pick on you.
Well, on my side of it, insurance is very hard. And there have been commitments made to women, specifically what all insurance policies, so health insurance specifically, what we think that's supposed to do for us. And many women have a poor encounter with that commitment, right? So you thought it was preventive and you got a bill. So I think a lot of the risk management that we do for our own health is sometimes it's easier to not deal with it until it's a big deal, right? So we are I tell everybody, you're the captain of your own health ship, right? So this conversation starts with like you taking a little control of the things. So I think when it comes to our own health, those who want to know engage really quickly in how insurance helps them. And those of us that would rather wait, that's a strategy as well.
All right. Ashley, why do you think women feel so uncertain and unsure about insurance?
I don't think a lot of us really had learned too much about it growing up or maybe in our adult life. You know, sometimes if you're married, your spouse takes care of that. A man might take care of that kind of thing more. So we don't really focus a lot on it. But more and more women are coming in tune to, you know, what do I need to make sure I'm protected? You know, they have more of an interest in why insurance is important, and they want to know, you know, especially now that things are getting more expensive, you know, they're managing budgets and things like, why is this so expensive? And, you know, what can we do to change the costs? And just understanding the coverage is, I have found a lot of people don't really truly understand what their homeowner's policy is covering. And as far as auto insurance and all that, they're like, well, I pay all this money. You mean I don't have everything that the policy offers? Why wouldn't I have everything? I pay so much. It's like, well, because all those little, you know, rental car add-ons and roadside assistance, those are optional coverages that sometimes people take off because they want to save money. So just educating clients is kind of my favorite thing about working in this business, is explaining what the coverage is, how it works, and why you want it. Because a lot of times they don't want the coverage until something happens. Oh, now I need a rental car. You mean my policy doesn't pay for that? I have to pay for that out of pocket? Yeah, unfortunately. Well, I want to get that added on there. Okay, well, we can, but it's not going to cover this accident. So I just went through that yesterday. That's why it's fresh in my mind. But just overall understanding, I think more and more women are wanting to know how things work.
I think they kind of covered it, but I would say, I think with rising insurance costs, it's just been more on the forefront, right? So like if your insurance is super duper cheap, you just pay it, you go on, and you don't really think much about it. But as the insurance has continued to increase, we're finding that people are actually questioning a lot more about what's in their policies, what's actually needed. And I'm like her, I love those questions, because there's a lot of times where I'll review someone's policy and it has way more than they could ever dream of needing, but then they're missing something super obvious, right? So I think it's just it's a matter of, you know, what we've all said, like, it's, do you want to know? Have you engaged to try to find out? But then also, like, do you have a pain point? Because sometimes if there's no pain point, you're not actually pursuing the knowledge. So.
Any questions yet? Oh, yes. I love this so much. Okay, well, hang on. We're going to see how good my arm is.
Hello. A couple years ago, we had a friend die at 53, and he left his wife $1,000. And I watched that kind of unfold, and I was like, okay, that is not happening to us. My husband and I both have capers, and I upped our insurance to, we did have 25, but I upped it to 50 for both of us. Our house is paid off. One car is paid off. We're $3,000 from paying off the other car. I don't foresee us, we're both 55. I don't foresee us having to purchase another vehicle. We can make these last until we decide to quit driving, or our nieces and nephews take our keys away. But do I need more, do you think? What's a good number to have?
Oh, I love that question. I'm so glad we got it, because that was one of the specific questions from last year, and I'll let Sarah go with that one. Thank you.
Well, for you specifically, you've done a good job, you know, tidying up some of the loose ends that we leave to our family members when we pass, right? So if there's no bills to pay or passwords to figure out to close out those accounts, then I would answer to you specifically, how much do you want to leave your loved ones, right? Because now you're leaving them an actual cash benefit, which most people aren't able to leave, right? They're leaving enough to not put me in debt after you pass. So if you're to the point where you're going to be able to actually reward people to live a legacy because of the gift that you give them, then I would buy as much as you can for all of the loved ones that you plan to give it to. But then I would be straight up with them, right? Like right now it fits my life. So don't bank on the 200,000 because by the time I go, because I'm not going anywhere soon, it might just end up being about $10,000, but I'm thinking about you, right? That's the message. For someone else, I might say, hey, if you are young and you can buy it through your employer right now, it's super duper cheap. It's less than lunch, right? You can buy a large amount, which makes you an insurable person out there in the finance world. So if you're young and your job offers it to you, you should almost always buy it. If you're middle-aged and your job offers it to you, you should do the value proposition to see if you can afford that coming out of your paycheck. And if you're still working in your mid-50s, I would go back to seeing how much a policy through your employer might cost you, because that might be an affordable way and a convenient way to leave a life insurance benefit. So I would say, if you were my aunt, as much as you want, right? But I would also be sure that you can take care of all of your other needs before that became a stressor.
Great question. I love it. I'm going to tack onto it. I know if you look online, yes, Google or ChatGPT, how much life insurance do I need? There's a common rule of thumb that we see that is 10 times your income. Can you give us a little a lesson on that? Is that appropriate, not appropriate? It depends.
Sure. I think examples are the best way. So I have two daughters who are 21 months apart. And when we got pregnant with them, we did the prudent young adult thing to do, which is we bought some whole life insurance. Right. So we went out of our employers. We bought it ourselves. We had to go through the insurability, but that was responsible because now we felt like we had kids. When we had our surprise son, 6 years later, my husband quit his job and I did more of what I was able to do. During that period of time, the stakes were much different in our family, right? We both weren't contributing to the afterlife if something happened. Now it was all of the chips were in my basket. So we changed our insurance strategy and I bought a really cheap $1 million policy. The term was like 10 years. So if I died in 10 years, they'd become millionaires. But we also thought for that 10-year period of life, this is probably how we're going to be living it, right? Like I'm the breadwinner, you're staying home. So if I die, that's bad. Not like it wouldn't be bad if he died, right?
More bad if you died.
Right. We kept those whole life policies as well, though, because they have a little bit more rate stability. So they always fit into our budget, which is very important, right? Like that was part of the lifestyle that we were living as we had $125,000 each. So I never used a factor. I used my budget. And it's like, if it was too much to stay in my budget, I would get rid of it quickly. And if it was so cheap I didn't care about it, then I'd probably forget about it and let it lapse, right? That's the other thing that happens with insurance is sometimes the policies lapse. So I have seen calculations like that, but I will always say you should buy as much insurance as you can get for as cheap as you can without medical underwriting, right? If you have to go through all the medical underwriting, the conditions change so much. So when you get guarantee issue insurance, really listen to that because they're saying you can buy this, no questions asked.
So that'd be a good question to ask if you're looking for life insurance. And ask your agent or your employer if it happens to be available through them. Do you have guaranteed life insurance? There's a term I haven't used before. So, hey, look at me learning new things. Okay. Any other questions right now? Oh, wait. Well, hey, listen, I love to be. This is much more fun than us just talking at you. No, we want the back and forth. Much better.
Okay, I have two questions.
Okay.
One is, I have $1 million policy. What's the criteria for needing that? And the second question I have is completely different. What's the difference between an independent insurance agent and like someone from State Farm?
Great question. I'll let Sarah answer the life one, and then I can hit on the independent versus State Farm. Thank you.
On the policies, on any really face value for a life insurance policy, there's two things that I would always look for. One would be the term of that policy. 20 years ago, like your auto insurance agent sold a lot of policies, and those policies would have maybe a 20 or 30-year term. So when you're getting into your mid 40s or early 50s, sometimes the term of that life insurance policy that you purchased is done. And you didn't die within those 20 years, congratulations, but now your insurance is done.
This wasn't a life insurance policy. This is $1 million house policy.
Like an umbrella? Oh, I'm going to hand that to the ladies over here because I would like to learn about umbrellas too. These are a big talking point in our agency.
Okay, so we'll shift gears, and I'll repeat that in case you didn't hear it. But the $1 million policy she was talking about, which I misunderstood as life insurance, so I apologize. But it was an umbrella policy. So we will let our resident personal lines experts speak to that topic.
So this is a slated question that we were prepared for. So an umbrella policy for its just general purpose. So you have underlying policies, which would be like your house and your vehicles, right? Sometimes other stuff too. If you want more coverage from a liability perspective than what's offered on that policy, you can get an extra policy that's called this umbrella. It is just for the liability. So there's a lot of question about like, okay, so then do I get to pay out extra if it hits this building? It's like, no, it's liability. It's for mostly injury type stuff. So you have your underlying policy and then you have the extra policy. When I start, nerdy insurance agent, we would love everyone to have an umbrella, right? There's always a circumstance that can exist that you would need it. When I start talking about it heavily or really pitching it because I feel like the need is elevated, if you have a swimming pool, if you have a boat, if you have youthful drivers, if you have an elevated risk from a liability perspective. So if you're concerned that you have a higher risk that someone might sue you, someone might get hurt on your property, you might cause injury to someone else, once the underlying limit is done, you then kick into that umbrella. And you do get legal defense as well as like settlement if you have to settle on anything. So that's the point of the umbrella. Somebody that's 20 years old, owns nothing and has good auto limits, maybe they wouldn't be the best candidate to pay that extra money, but they're so cheap. So there's always a circumstance that you could need it. They don't pay out very frequently. That's why they're so cheap. But if you needed it, you get $1 million, or they're increments of $1 million. So you can have $1 million. I've had $5 million umbrellas that we've sold before for people that own $3 couple $1 million homes in multi-states and have a ton of money and they're more of a public figure, right? They're just more of a target. So that would be why like that person would be recommended one.
Just to add to that, I think it's more of a peace of mind. We're in a very litigious society that's kind of a contributor to rates as well right now. It's not just storms, it's legal defense costs and all of that are through the roof. No pun intended. But they, the lawyers are trying to go after any amount of money that they can get their hands on. And so for me and my clients, it's that peace of mind knowing, okay, I have $250,000 underlying insurance, which seems like plenty, but you'd be surprised how quickly that goes. If somebody's just seriously hurt, and let's say they're not even trying to sue you, but they're in the hospital for a month or two, that limit will be gone in like a week, so having that extra protection there for, a couple $100 a year, generally speaking, is a lot of times people are like, oh yeah, where else can I get $1 million worth of anything for, $250? Depends on your situation. The more stuff you have or young drivers, that cost is going to go up, but generally speaking.
I would say too, like the term ambulance chaser is actually a real thing. That these personal injury attorneys quite literally send people in cars to these scenes of accidents, and they are trying to get you to agree to be represented, to go after the insurance company or that individual for more money. Like that is real. That happens in Wichita all day long. So don't think that, even like I said, like the 20-year-old with no assets, no nothing, like if he causes an accident and someone's actually hurt, you can bet that someone's going to pull up on the side of the road, might be in a suit, and is randomly talking to this hurt person. I know that sounds crazy. It is happening. And one of the biggest increases in auto insurance payout in particular is from lawyer fees, lawyer defense, just all of that. So that is something an umbrella would help protect you with.
On your second question, what's the difference between an independent agent and, say, an American Family or a State Farm, Farm Bureau? I could go through a whole list of them. Independent agents contract with several different companies. Some you may have heard of, Nationwide, Allstate, and some you may not have heard of. Auto Owners Insurance, Cincinnati Insurance. Independent agents usually have a variety of carriers to choose from, versus your agent that works for State Farm can only offer you State Farm policies. Or if they work for American Family, they can only give you American Family policies. I will do my best to be impartial in this area. You can work with either. However, if you're working with a captive or a direct agent, they have limited options. And if you have, simple situations and you don't have elevated risk or a loss history or anything a little different or odd, that may be the best option for you. However, I would argue if there's anything out of the ordinary, an independent agent is going to have more options to offer. And arguably, I think they have more options to offer you, even if it's clear cut black and white. So there's my my shtick for independent agents.
Are cheaper?
Are they cheaper? Is her question. It depends. Yeah. And your insurance rates, we can talk about it. How much they cost depends on a variety of factors. And I just give the warning, if you're going for the cheapest coverage, that's fine. That is absolutely a choice. But be careful of when you're getting something cheaper, there's usually a reason. And it's usually because there's less coverage. And if you can absorb that and you're comfortable with that risk tolerance, that is absolutely fine. But just know that going into it. If it seems too good to be true, solid chance it might be. Okay. I have another question. Oh, man. I'm going to really get this up there. Oh! All right.
So what is the difference between the business liability, work comp, and that umbrella policy? And that's one question. And then the second one, how do you determine whether you need it or not?
Ooh, okay. So business liability and work comp. So when they were talking about umbrella, that was from a personal sense. Like it sits on top of the liability coverage you get for your homeowners or through your renter's policy, and also the liability coverage that is on your vehicle, which if you own a vehicle in the state of Kansas and most other states, you are required by law to have a minimum amount of liability and property damage coverage. So that's what they were discussing. You can also purchase an umbrella policy in the business sense. So if you own a small business, if you are the CFO or the comptroller for your business that you work at and you're in charge of making insurance decisions, businesses also purchase umbrellas. Arguably, they purchase much higher umbrella limits because the chances of a business getting sued are higher than an individual. And if there's a finding of negligence, typically within a business world, the settlement or what a lawsuit might end up paying out is going to be much higher. And so businesses, it's very common to see $5, $10, $15 million limits, and there are companies all over the state, country, and world that have towers of umbrella where they have hundreds of millions of dollars in umbrella coverage just to cover that risk. And they do sit on top of employer's liability, which is kind of the companion to workers' compensation insurance. Okay, that was your first question. Can you repeat the second one for me?
The second one was kind of disturbing.
Oh, how do you determine if you need it? Like a personal umbrella or business? Okay. Business is mine. That's what I did when I was when I was a retail agent for years. How do you determine it? What can you afford not to lose? And so it's similar to when you're, weighing the cost and benefit of a personal umbrella policy. The more assets you have, the more exposure you have. So, if you have made really good financial decisions and you have some wealth, you might be a bigger target if you get into a fender bender or something worse. Businesses, by and large, tend to be natural targets because even if the balance sheet or the income statement doesn't show it, people on the street are like, oh, you own a business, you're rich, you got tons of money. Not always true, but people just make that assumption. And so it's, how much can you afford to buy? What risk tolerance are you comfortable with? And what are your exposures? If you're a company that manufactures fireworks, you got some exposure, buy as much as you can afford. But if you're run-of-the-mill, mom and pop retail store or, something very vanilla that doesn't have as much of an exposure, you can probably get away with less.
Between the villa and then having that business plan for you work, because there are different for
So the work comp is what we call an underlying policy. So you have to have that first, and then the umbrella sits on top of it. And it's kind of like the name umbrella. You got to have something underneath it. I don't even know what you call the middle part of an umbrella, but the part you hold, that's your underlying policies. So if you're a business, good thing I'm in a room with old women. If you're a business, you got to have employer's liability, which is work comp, auto liability, general liability, and then the umbrella will sit on top of that. And you may, depending on your type of business, have other kinds of liability coverage, but you'll have those underlying ones, and you can choose the limits of those. And then if you want more, you can choose to purchase an umbrella, or you can choose not to. Thank you. Yeah, great questions. Oh, I have more. He's got it. No, you toss. Oh, yeah. Yellow shirt. Good catch.
On the car insurance, is there any recommendations that the insurance companies have for people who are driving? It's crazy out there nowadays. Should we put cameras in our cars? Should we?
So I say yes, put cameras in your cars, because what can it hurt? People will change their story. They may say, oh, it was my fault, But then when it comes down to the adjuster and the claims department, they're like, oh no, she pulled out in front of me. People will switch their story so quick. So yes, if you can afford it and if you want it in your car, I think it's a good idea. At our agency, we actually have agency standards. So we won't write a policy with limits lower than either 300 combined single limit, which is 300,000. So that's for property damage and for bodily injury. And then we also package the umbrella. So we package the home auto umbrella every time we can, but we won't write an auto with lower limits just because we want to make sure you have, I would say, adequate coverage, but there's always like, what is adequate these days? Because somebody could say, 500,000 is, not enough. But the state minimums are 25,000, 50,000 per accident. So 25,000 per person in the vehicle, 50,000 for the whole accident. So I don't know if any of you have been to a hospital, had a hospital stay. $25,000 might get you half a day in the hospital. So I think the state really needs to evaluate changing that requirement because things have drastically changed since that was put into law. But I would say, it just depends, there's that word again, on your situation, and if you feel like, well, maybe I can't afford that, you might be surprised at how little difference it is between, 100,000, so they call it 100, 300 coverage, 100,000 per person, 300,000 per accident, and the 250, 500. you might be looking at $100 difference a year. That's worth it. And then maybe add on that umbrella.
To have an umbrella on mine. The other question is, when I got my car, it had the where it tracked your driving and everything. Is that something you recommend?
Can you speak into the microphone a bit? Just
When I bought my car, it had a track. You know, it rated your driving. It kind of tracks you and everything. Is that something you recommend?
Yes. So you're going to get a more individualized rate by having that. You can control your rate a little bit better. Otherwise, you're kind of paying, what they base rates on and actuaries and, kind of the law of large numbers. Everyone's paying, into this pool of money. But when you have, she's talking about you get the app on your phone and, it registers like hard braking, acceleration, usually the time of day driving, nighttime driving. If you do a lot of that, that kind of dings you a little bit. But you can control your rate a little bit better and get discounts because of your good driving habits. So yeah, we do recommend that.
I think my insurance company, but GMC did away with it because somebody sued for privacy issues. So
there are some privacy concerns there. Telematics is kind of the broad term for that and for companies. It is a great way to reduce your rate if you're a good driver. And I say that if. And if you're you have an app and it's going to track hard braking, hard acceleration, how far do you drive, what time are you driving? For me, it was worth it because I'm a relatively good driver. I just go 10% over the speed limit everywhere. But then my husband absolutely refused, he's like, I don't want them to know what I'm doing, and I get that. So it's, personal preference. It can help. It can also hurt. I mean, for every person where it saves 15% for their auto insurance, well, there's somebody else out there that's getting a 15% surcharge because they brake hard. And when they accelerate, they are tearing out of there. So
Exactly what I was going to say. So when I take in information for a new client, I specifically will ask, what do you do for work? If you are a truck driver and this particular carrier offers telematics through a phone application, you are not a good candidate because you're driving all the time. So don't sign up, right? You have to think about it. And I tell, I'm like, are you super aggressive? Are you flying into stoplights, then gunning it when you go? Are you a mom with a kid and you hand your phone to your kids in the back seat for them to watch cartoons while you're driving? You have to ask enough questions because not all companies will surcharge, but some will. Some are only 90 days. Some are indefinite. Some will change your rate every month. Some will only do it at renewal. You have to explain all of that, and you have to ask enough questions on the intake to understand really who is and is not a good candidate, because it's wonderful for the people who do great. But if you're bad, you don't want to do that in some cases, and you got to know.
great questions. Thank you.
Oh, 2 questions. One to you and one to you. Where can I find the data for lawsuits in my zip code? I feel like, my insurance company requires, we had a risk. We got rid of, rental properties, and our only other risk is our youngest 20. And so where the lawsuits, how often it occurs, because people always say, lawsuit, the fear and all that. But they require, we do the 500, 250, and then we do umbrella on top of that. Like, Mike and I are retired. We drive the minivan. We just drive around our neighborhood. We just have one little liability, which I am a pediatric nurse. I understand the costs, but I'm like, where's the data? Should I call a, personal liability? Where are you guys getting your data analysis from?
You want me to take this one or you want
Sorry, no, I should be talking. This is for her because we honestly have no access to that level. We know statistical, maybe state or region, but I don't know that data exists, does it?
I don't think that it exists down to a zip code level. There are some places, the Insurance Information Institute has a lot of information.
My brother-in-law works for the National Association of Insurance Commissioners.
Okay, in Kansas City.
In Kansas City. And you know what? Do you think I should ask him? I've kind of, whatever. But I think, he was but yeah.
That'd be a great question.
So
So
you guys don't have access to that because of like, how much is it really happening? You know, and like, you know, sometimes I think, Mike, you know, we're kind of overinsured a tad, but we do have the 20-year-old so I'm ready. My next step is what are the hacks to get her off the liability, our liability?
well, before we leave the liability one, that's okay. There are some places that have information. It's not necessarily the best, and I say that because so many of the claims don't get to the lawsuit level. An attorney, you know, we get into a fender bender, you hit me, I immediately call up Postotnik or some other attorney that has some billboards everywhere to represent me. And they go after you, they go after your insurance company, whomever, trying to find deep pockets and get as much money as possible. It may never get to the level where a lawsuit is actually filed. And until a lawsuit is filed, we don't have that information. Each company has it, but I don't know a lot of companies, they do not give out that information. It's part of their overall, you know, actuary, and it's not buried. It's in their financials, but drawing that out is difficult at best. So, yeah. So it's hard. Okay, what was your second question again?
Just a little hack.
Oh,
Well, it's funny that was your second question because I was going to say this anyway. So I think a grossly misunderstood notion, I want to clarify. Auto insurance for drivers is not health insurance. You do not just get to keep your kids on your policy until they're 26. I don't know why people think that. It happens all the time. And I'm like, wait, so you don't own their car and they don't live in your house and you're still paying the insurance. So not necessarily in your circumstance in particular, but I'm running into that all the time. And as an agent, it is our job to find out who owns vehicles. There's a term in insurance that's called insurable interest, which basically says you have no business insuring things you don't own. It doesn't matter if your kid's 18. If they own their own car, they need to be the one to insure it. They have to be the name on the policy. So if, for example, your circumstance is that your child owns their own car, they should never be on your policy. They should not be part of your liability. They should be totally separate, especially in the cases that they live somewhere else.
and if you still want to pay for their insurance, that's fine. You can pay for it. Anybody can pay for it. But if
We sold it for so don't calling she doing that.
Yeah, I would say particularly when they are no longer in your household. Because if they're in your household, even if they do own their own vehicle, lawyers are funny. They'll look for any little way to come in.
we're not funny, we're creative. We're creative.
To potentially still come after your umbrella because they're a household member. And technically, as a household member, we have to list everyone in the household, but we can say she's got other insurance, and then we upload a copy of hers, and then your company charge you for her. But there's still that risk in your home because what is to keep her from grabbing your keys and driving your car to the grocery store? So particularly when they do move out, they have their own address. And I'm not saying just to school, you know, for the year, they're technically still a household resident because they're coming back for, you know, holidays in the summer and so forth. But when they've officially moved out, get them on their own, get them on the title as quickly as you can, get your name off of it, let them go on their way. And a lot of people will be like, oh my gosh, that's so expensive once we give them the quote, because they're no longer getting the homeowner discount or the multi-policy discount, married rate, longevity. They're not getting all that, but everyone has to start somewhere is what I, you know, advise my clients. And you can still help them pay it if you'd like, but you're going to help your overall exposure.
Well, then I thought I could do sorry. Well,
Do they live in your home still?
yeah. Well, yeah.
Yeah, this is beyond that too. Like as far as the way that to my understanding, the way that legal sees it versus the way that carriers see it, it's like if they're there, they sort of like have to be covered because you can't really exclude it. So that's what she was saying about listing them. They don't get rated, but they're still like pseudo covered. No.
If they live in your house, keep them on your policy. Once they're, you know, out of college or on their own, kick them off on to their own. Ooh. I'm so sorry. You guys are asking great questions. It's all over the place. I love this.
Thank you.
Yes.
So we have maintained our life insurance through our employees or employers, my husband and I, but now we're getting closer to retirement age and we're really starting, I'm thinking, oh my God, if we, once we no longer have these jobs, we don't have life insurance. So I was just wondering, with that kind of factor, what would be maybe the best avenue for us to pursue?
Great question.
The first thing I would do is see what portion of your employer's life insurance you can take with you. So there's two terms. One is called portability. That means you can take it all with you. That's often found in voluntary or supplemental life insurance offerings. So that's called portability, like I port it with me.
It's like a porta potty,
Like a porta potty.
but for life insurance.
The other that exists in those employer life insurance policies is something called convertibility. And that's designed more for what if you had a life-ending disease and you had to stop working and you will not be insurable in the open market for sure. That employer paid portion generally has some part of it that you can take with you. So those two terms exist in employer-sponsored life insurance, convertible and portable. But you are right, because isn't that the nice blessing? We have this super cheap and often paid for us policy, and then we retire or just, slow it down and we go look at the price of life insurance for someone over age 50, which is kind of the F word in life insurance. It's 40 in health insurance.
Ew.
Okay. But it's about 50 in life insurance because we're living a lot longer. So it doesn't cost as much until we're on the brink of the downside of life. But what I would say is buy a large short-term policy, right? And it's kind of like you're investing in your life at that point. So I'm going to buy a moderate 10-year term. Now in 10 years, I'm going to be 10 years older. And if I made it through 10 years, great. Then I'll look at something else. But it becomes very expensive to buy a large amount of life insurance over age 50, unless it's term, right? There's some neat things out there right now, though, so I would encourage all of you to go look at it, like Ethos Life. There's some, let's call them the tech insurance firm really has gotten involved. And so there are some legitimate online or advertised, guaranteed issue, inexpensive life insurance for the plus 50 population. All of them are just buyer beware, right? So take a look at the fine print, and I just tell people to make them explain it to you like you're a fourth grader and use that term. Like, tell me like I'm a fourth grader, what happens when I die if I buy this policy?
Yeah.
Right? So there's a lot of tools we can use now to do that. We can use ChatGPT. We can do all sorts of things to have a more engaged conversation about what I'm buying. But for sure, portability and convertibility are two words that exist in those policies.
And if I'm going to go Google it, guaranteed issue life insurance, term life insurance over 50. Okay, there's a starting point. Okay, great. Oh, I love these longer ones. They're good practice. It's like I played slow pitch softball.
All right, I think this one's probably for Sarah. So I'm 23, dual insured for health insurance under my parents for the next couple of years, and then I also am under my husband's. My husband's work pays for his, so essentially we are kind of free rolling it right now as we can, but as we're kind of family planning and we've been married a year, both have had surgeries, which is kind of bizarre. As we move forward, what are some things to look for as we're going in the next probably 3 years, look for different health insurance plans? And right now we don't have an HSA. Is it possible to get an HSA if your employer does not offer one?
Oh, great question.
Yep, those are a few questions. So let me answer the easiest one first. Health savings accounts, HSAs. You have to have them with the high deductible health plan. So you can think of those two H's go together. You can have an HSA, but you can't contribute unless you have an HDHP, which is a very specific health plan type. So if your employer doesn't offer it, you can buy those in the individual market and then gain access to that health savings account.
It's funny, when kids were allowed to stay on work insurance over age 21, which used to be the old age, this policy predicament presented itself, which is you are a dependent on your parents' plan and a spouse on your husband's plan. So how do you coordinate those benefits? And is it even beneficial to coordinate those benefits? And if there's nothing coming out of your guys' checks for it, then it's not a hard decision to make, even though it could be complex behind the scenes. In that situation, I would really recommend figuring out which policy is best and just going with that one. Because the idea of dual medical insurance isn't the same thing as like dual dental insurance. When you've got two insurance policies for dental, both of them pay out. But when you have dual medical policies, especially like they're offered through the two employers, they aren't helping you, right? They're working alongside each other to get you just what you're deserved under those two policies. And it's really costing your parents money to keep you involved. Unless you have other sisters and brothers, then it's a whole family thing. So what's the, right? That's what we call that. I would at least have your parents wrap up a picture of your medical ID card for Christmas every year, because that is a good gift, right? Or to what they're saying is, maybe it's time that you say, hey, I'm just going to be a spouse on this policy over here. Definitely, as you and your husband are planning for the future, you have rights to your parents' plan until you're 26 years old. So you have the ability in the next few years to go back and forth to whichever plan serves your life best as it's evolving, right? So I would take the best of both worlds for the next 3 years here, and every year check in at that open enrollment, like, where am I at in life? Which policy is going to serve me the best? But having both of them, honestly, is just costing both of those employers dollars, which, back to the point, all business owners are millionaires anyway, so what's it matter? Which isn't accurate. But, pick one to be on right now. If you're generally in good health, just roll with the one that has the richest benefit set for you. And then as you continue to evolve, like you're going to have a baby, then you want the one with the lowest deductible, the lowest out of pocket, right? When you have a known thing coming up.
Can I ask a follow-up? Sure. So we were explained to us that if I got with my husband's right after we got married, they're both under Blue Cross Blue Shield, both insurances. We were explained to us that my primary is my parents, and then I took on a secondary. Mm-hmm. And essentially the primary would cover until the secondary insurance kicked in, and then we would get the final bill after the secondary kicked in afterwards. Is that right?
And can you repeat that for others in the audience?
Yep. I'm going to paraphrase. This is called coordination of benefits, and it's the most complex part of benefits. So your primary on your parents, so they run the claim through, and this is Blue Cross specifically. This isn't all insurance companies, but to your point, Blue Cross is who you referenced. Blue Cross said, hey, we do this for you. Here's how they do it. Your primary on your parents' plan, you run through that first. You have deductibles, co-pays, co-insurance, some cost share. Then they run that claim through your husband's plan. And they say, okay, how would it have paid if that was the only policy? They take the primary policy, and like, let's say you had $1,000 deductible on your parents' plan and a $500 deductible on your spouse's plan. Well, you have satisfied your parents' deductible and your husband's plan's deductible, because it gets satisfied in both places, and you don't have a bill for a deductible, right? Because the two insurance policies picked it up. It doesn't really coordinate well unless one plan is superior to the other. If there's one that is like zero deductible, zero copays, $2,000 out of pocket, that's superior to a plan that has a $7,000 deductible and a $10,000 out of pocket. So unless they're wildly different, there's not much benefit to you.
Thank you. Great questions. Oh, we only have 10 minutes left. Or less. Okay, yes. I was going to say any more questions, but you guys are totally hitting it out of the ballpark. Carry on.
In the last year, probably, I feel like I've heard a lot about the long-term healthcare insurance coverage, and I don't know a lot about it. I need to do more research, but I'm curious if it only covers long-term care in a facility, or if it also applies to at-home care. And if it doesn't, is there a better way to prepare for at-home care as opposed to a facility.
Sure.
Do we want to talk about irrevocable trusts and living wills? Because that's what I used to do.
So long-term care is a really interesting policy because it depends, right? I'll use that term. We talk about policies being really rich. Those are the expensive policies, or policies being lean. Those are cheap. So the really rich long-term care policies, they're going to pay you. Think about how long-term care really comes into life. I think through an example is the best way to figure out how much a policy you want to pay for. And think of a condition like ALS. So let's say you get diagnosed with ALS. For a while, you can be maintaining. Maybe you need some home care. Maybe your life evolves and you need more home care, and then you need your home modified, and then you can no longer live in a home, so you have to go into a long-term care facility. A long-term care policy can pick up all sorts of portions of that example. If you want home care, you can include a policy with home care. If you only want policies that pick it up when I am no longer living at home, then that's your facility. They're called ADLs. That's the most important part of a long-term care policy, is you have to lose the activities of daily living. And one very important part of that is like neurological disorders like Alzheimer's and Parkinson's. That's different than having a stroke and no longer being able to use the left side of your body, right? So how much you want it to cover, what sorts of things you want it to cover, and where you want that coverage builds up long-term care. Long-term care policies are cheaper when you're older because you can't buy as much. You're more likely to use it. They're also really cheap when you're young because you're paying that in advance. Long-term care is the most expensive right when you finally get into the groove of things, when you realize planning's important and you got enough money. You don't have enough money for a standalone long-term care policy. So my strategy would be to look for some life insurance policies that have a long-term care rider. Right, a little easier to purchase, and they have some level of benefit. And then talk to your employers. There are some neat long-term care policies that employers can sell in the state of Kansas, so a new little avenue for us to purchase those types of policies with the help of our employers.
Okay, well, actually, we were supposed to end at 1:45, so my bad. Thank you all for coming, for answering questions. Thank you all for asking questions and being such an engaging audience. Yeah, insurance, again, not sexy. Nobody ever, at least when I wasn't a kid, I wasn't like, oh, I want to be an insurance agent when I grow up. But it's something that we all deal with. Health insurance, auto insurance, you got to have it required by law. So my parting advice is don't be afraid to ask questions, and ask your agent a lot of questions. And if you have an agent that doesn't answer them or kind of poo-poos your concerns, find a different agent, because the right agent will embrace you wanting to know more, wanting to plan better, and wanting to be, I can't think of the word, covered. Yeah, and you being the one to take the steps, being proactive, there we go, instead of reactive. So thank you all, and have a great rest of your day.